Welcome to Trading Lounge and the European indices for the 21st of August. The European indices are a little bit messy, like they are in Australia as well, and we just need to be a little bit mindful to be mindful of being in bearish or bullish. So in this instance here, we can count this here as wave B here, and 1 and 2 and 3 and 4 here, and 1 and 2 and 3 ABC for 4 and 5 here. So down for C as a wave 4 here, and looking at this as wave 1 and 2 here and 3 here. We had this as wave 4 here, but it's just gotten a little bit bigger and uglier, but it hasn't really found the 12,800 as the resistance here yet, and that was our key to short this market. However, we can look at this wave 4 being in place. So any move below that current low here, and then we can look to be on the short side here, but we haven't got that retested resistance here yet for this. So if this is the case, then the market will push up into this area here. If Friday closes strong, then Monday's going to follow through, so you may be able to bring your a smaller entry point down here. Say we've got 800 here and 13,000, so the 900 in this space here can be a catalyst for a long trade setup here. So we'll just leave that there, and we'll move that, copy that, and put that over here. But I'm just going to halve this here as a half trade, because we're just facing a large number here and we still have another count. So if that becomes the support here, the 900, a nice tested support, then you can go long from that point, and in that case we'd be looking for a classic trading levels pattern, which would be the arrival, the reaction, first high above the level, and then a corrective move here, and then looking at this high here and the second high here, and you maybe even get a better position in here. And then obviously it's going to be a tough journey getting through here, but we should be taking out that high here at that point and heading a little bit higher. We may not get up to the 300, the levels above the 13,000, 1, 2 and 3, so there's 300, that's the top of group 1, and then 2 and 1, 1, 2, 3. So it may just get up to the 200 here, but we really want to make a high above this previous level over here. So we'll see how we go with that. On the bearish side for this, we're looking for the 12,800 to become the resistance, and I think it's on the 4-hour chart. Yeah, so we've had this for a little while now as wave B up here, and all of this down here as wave 1, an A and a B and a C for wave 2 here. So we need to see a drop through that there to get that triggered for a short trade. If that's the case, we'll be down at the 11,500 area for that. But yeah, look, we just need that to play out. Yeah, it's a bit strange. I just want to cover both sides, because I can see both sides of the coin here. I can see both arguments. So as a trader, I don't care which is right or wrong. I just want to be on the right side at the right time. So this is how we're going to handle it. And the FTSE is the same as well. The FTSE has got a bit more of a bearish connotation to it, as it's always been a little bit sort of weaker. One of the main points here is that all this here can be counted as corrective here, but I'm not really seeing 5 waves up to this point. I can squeeze 5 waves in here, but it doesn't look very good, so it does count better as an A and a B and a C here. And once again here, from that low here to that high here, the 61.8% comes in just above the 6,000 here. So we really want that 6,000 as the resistance here, and you've got to get a little bit sort of clear about that as well. So you really need to see that. Just details here really, but we want the first spike to come down, and then we want it to come back up and test it, and then that will give us our reference point low at that point. You can get in earlier than that and do whatever you like, but until that becomes the retested resistance, then you could be up for spikes like this or like this. So, you know, we really want that. We want that 6,000 tested. We want those sellers to, you know, to come down and give us that resistance, that supply at that particular price point, because that's where we can put our stop above those orders once they develop there as the 6,000. On the long side here, of course, this could be counted as an A and a B and a C wave down through here. Probably not a very good C wave, and probably does need to see another little spike down through here. But what we could do in this case now is we can move this down to the second high here for this. And if you see strength here earlier, well, then you can move into that as well. But you definitely, if I was going to go long here, if it was me, I would need to be, from 6,000 to the 100 here, the 100, I would need to see support on group 1. So group 1 would be 2030 here. So the 30. So you want a tested support on the 30, and then with a small position. And then if the 50 here, the 60-50, the midpoint here became the support, tested support, then you can add again on top of that. And then this one over here is close to the 100, so we would look for support on the 100 here. Nice tested support on top of that. That's what that really means here, because whatever your strategy is, you always gravitate to the closest largest number and look for support or resistance at that point. So just to recap that, the 30 is the top of a subgroup 1, so you'd want to be on top of the 30 as a nice support with a small position, and then you want to add your second position at the 50. But you want to make all these small positions here, because if this market's just say going to go up here, well, then it's going to go up and take the high of this out here. That's what it would need to do at that point. So plenty of time, but just lots of small positions in all the way through until we become confident, and then we can move into it. Otherwise, it's on the short side, but we want that 6,000 as the retested resistance. Alrighty, I'll leave it at that. Thanks for tuning in. Cheers.